So the main topics we're going to be talking about is JobKeeper. Everything here is related to JobKeeper. So if you have any other questions regarding anything else, we can probably answer it in the Q&A. The main focus I want to focus on is these three main topics. The important information about JobKeepers, the common mistakes that businesses, clients, small businesses, as well as accountants are making as well. So there are a lot of detailed rules that you need to follow to get the JobKeeper payment. So you need to make sure that you satisfy it. If you don't satisfy it, you're going to actually lose out on $1,500 per employee per fortnight. And also the changes that happen. So there was changes and updates that happened over the weekend, as well as on Thursday and Friday. So I want to go through that. And one of the main changes that happened was the alternative test. So when we first did the JobKeeper topic and we explained it to everyone, the main question we were getting asked was, what happens if my business was running within 12 months? It wasn't set up like 12 months ago. How do I compare the 30% loss? Or what happens if I purchase a new business? Or what happens if my income was not comparable? Meaning that like 12 months ago, I was making nothing and then I was started to grow, but unfortunately, it's not a 30% loss compared to last year. So alternative test covers that. So the ATO realized that there was a lot of people that missed out on it. And they basically said that you are still eligible, but there is an alternative test that you had to follow. But they never actually explained what the alternative test was. They just said ATO discretion, which really confused a lot of people as well as accountants. So they finally clarified it. So the first one I'm going to go into is the important information and common mistakes that business owners are making, and as well as accountants. All right, so the common mistake that a lot of people are making, and a very big deal, is maternity leave and any other type of leave. So a lot of business owners think that this is a grant. This JobKeeper payment is going to come into your bank account and then you're going to pay your employees. But this is not exactly what's happening. This JobKeeper payment is a reimbursement of your wages. So what that means is that anyone that's eligible for this payment has to be paid first to get it. So maternity leave people or people on other leave that are unpaid, they actually have to be paid $1,500 per fortnight, even though they're not working, but on the books, in order for you to get a reimbursement for these guys. And if you don't do it for these guys, you're doing something not illegal, but you're doing something wrong. Because if you're trying to make sure that all your employees are eligible for JobKeeper and you're trying to claim for JobKeeper for your employees, you actually have to claim for everyone that's eligible. And the ones that have to be eligible are basically people that are on maternity leave and other leave as well. So that's the unfortunate thing about this JobKeeper. And I don't think the ATO and the government really realized that when they set this up, but they pretty much put it in the legislation that even though you're not getting paid, as long as you're on the books, as long as you're on some sort of leave, it doesn't even have to be paid leave, you have to be paying this employee $1,500 and then getting a reimbursement. It's really scary because, like, what happens if you don't get the reimbursement? But the tax office is basically saying that we will reimburse you for these ones and you have to do it. So over the weekend, there was an update that basically said that you have to apply it for every employee eligible. So you can't just exclude some employees out unless you stand them down or you terminate them. If you don't terminate them and they're still on the books and you're still paying them, or they're on unpaid leave, you have to pay that $1,500 in order to get the JobKeeper payment. If you're not, then you're going to do something wrong. I had another common question that was asked, which is, which nomination form do you fill out for a business? So there's two types of forms, and if you have people on the books, if you're paying wages, you have to fill out the employee form. And this counts for any directors that are on the books, any employees on the books, as well as any shareholders or anyone related to the business. The only people that fill out this business nomination form are people that don't actually get paid by the company. They're directors or shareholders or somehow related to the company. And there's only, in this case, only one person that can fill it out. So the business nomination form is designed for people and businesses that are companies or trusts or partnerships that don't pay themselves a wage and not on the books, but they want to get the JobKeeper payment. But the downfall about this is that only one person gets this payment for the business. So if there's 2 directors, only 1 director can get the JobKeeper payment. So like I said before, just to reiterate, the nomination forms you get your employees to fill out. If you get your employees to fill out, you don't need to fill out the business nomination because only your employees will get it. So if you weren't on the books, you won't get it. Just note that. If you weren't on the books and you choose the employee nominations, only the employees will get it. And there's this last part about sole traders. Sole traders, you don't need to fill any of these forms out. You don't need to fill out employee because you're not an employee, and you don't need to fill out the business nomination form is because when you go and do the registration online, you're already filling out the sole trader form. You don't need to go and do the business nomination. There's a few other topics I want to discuss, which is basically you have to top up the fortnight, the 1,500 payments. If you employ employees and you're a business and you have wages, you have to top up the payment to 1,500 per fortnight. And that payment is the gross wages, so including tax. So once you take out the tax, it's roughly around 1,300. And you have to make that payment. If you pay on a monthly basis, then you need to make sure that you pay not just 2 times, it's actually $3,250. Because when you split the fortnightlies over 6 months, it actually equates to $3,250. And I did mention to clients initially, you gotta make sure you pay $3,000 if you're on a monthly basis. I'm actually thinking to be safe, you actually have to pay $3,250 just to be safe if you're paying on a monthly basis. So if you want to include, if you have employees that are not getting 1,500 per fortnight, make sure you top them up. Because if you don't top them up, that means that you haven't paid them the right amount. That means that you won't get the JobKeeper amount. If you're a sole trader, you don't have to worry. You don't have to pay yourself. If you're a business and you're getting the business nomination where you don't have anyone on the books, then you also don't need to do the top-up payment. Okay, and then JK is reimbursed, not a grant. So that's basically what I was saying. It's not a grant. The JobKeeper is a reimbursement of wages only if you have people on the books. If you're a sole trader or you're a business that don't have anyone on the books but you're electing yourself, then you don't need to reimburse them yourself. You can leave the money in the company or you can pay it out as a wage or whatever you want to do. I actually suggest leave the money in the company for now because you're probably going to be using it to pay for some expenses. The last information I want to, and a very common mistake is that people think that they can choose May, June, July, August, September for the turnover test. Technically, you can use those months. So if people don't understand the whole JobKeeper thing, is basically you need to choose a month that has a 30% loss compared to last year. So you can choose June, July, August, September, and choose that month to be the 30% loss. But if you do decide to choose that month, you're only eligible for the JobKeeper payment from that month onwards. So that means that if you chose June to be your loss-making month, like that's going to show a 30% loss compared to last year, that means that you only get reimbursed for June, starting from July. So what I'm saying to all my clients is, if you want to get the full 6 months of reimbursements for JK payments, you need to look at March and April. It's a really important thing you need to look at. A lot of people are thinking, oh, okay, March has already passed, April is looking at passing. If you don't meet these requirements, the last thing I've been telling all my clients is maybe try looking at it on a quarterly basis. So look at April, May and June and compare April, May and June rather than the month. But don't, well, I'm not saying don't. Your last result is to look at other months. So if you look at July, then you only get the JobKeeper payment starting from July onwards. So business nomination doesn't require wages. So like I said, if you're on business nominations, you don't actually require wages. So there was a few more updates that happened over the weekend. And basically they said that they released the alternative test. So there's different scenarios now. So if you're running a business under 12 months, you can still be meeting the JobKeeper payment. So there's a lot of business owners that have just jumped on board. They have actually started, and I know I've seen them already. Those businesses haven't started 12 months ago, so they can't do the turnover test. But they released the alternative test to cover this. But what they haven't released, and they haven't told everyone, is what happens if your business comprised of employment entities. So you might have two businesses in your business. You might have a company that just employs employees, and you might have one company that accepts all the money and does all the contracts. So what happens then? Because there's no money coming into this business as a turnover, the turnover hasn't dropped. and it's actually related to just how many employees you have. So the question is, how does that relate? How do I get the JobKeeper payments for this employment company? There's no employees in this company. That's just accepting all the income. The income has dropped in this company, but the employment company hasn't dropped, because the money that comes into this employment company is just money that pays for wages. So that's where a lot of people are stuck, and a lot of big businesses are struggling to work out if they're eligible for JobKeeper. This actually hasn't been announced yet. So if you have any clients or any people that are in this situation, or if you're in this situation, just wait for another week. I think it's supposed to come out. It was actually announced that it was supposed to come out this last weekend, but it just didn't come out. And the last thing was the elephant in the room. So I found this out last night and I was really excited about it, but I had so many questions. What if my turnover prediction is wrong? So I've had clients ask me, all right, I assume that in April, there's gonna be a drop in income. But what happens if I get to the end of April and I get this massive contract and the income is higher than normal and I don't meet the 30% test? So the ATO has finally answered this question, and the answer is basically, if you can prove that you weren't trying to operate a scheme, you actually legitimately thought that the turnover would be lower, and how you prove that is looking at your emails, making sure you do a forecast, speaking to your accountant and making sure your accountant does the maths as well, looking at your numbers. And if, for example, when you go all the way to the date of your registration, you can actually pretty much prove that you estimated the turnover was going to be lower. You have proof that you spoke to your accountant, you have proof that you've done a forecast. You also have proof that contracts were cancelled. So in your case there, then you can actually prove that the turnover prediction was wrong, but you actually had reasons to prove that the turnover prediction was going to be over 30% drop. So this answers a lot of questions that a lot of people were freaking out about, because some people, especially during this crisis and during this the COVID-19, couldn't tell if they were going to make the money. They couldn't tell what was going to happen. So if you just have a feeling and you know that your clients, you've lost clients, as well as you got your accountant involved to do the maths, then you're pretty much covered, really. That's what the tax office is saying. As long as they can't really prove that it's a scheme, if you have the evidence to prove that you actually done the turnover prediction properly. If, for example, a chartered accountant, I know someone does this prediction and does this forecast and actually looks at your numbers and they believe that the turnover is going to be dropped 30%, then there shouldn't be a problem. So the last thing I was saying as before is your last result is, yes, this is technically not the last result. The last result is obviously using another month, May, June, July, August, September. But if you want to get the 6 months, then your last result is choosing the quarterly method. And this is the part where you get a bit scared because you're not sure if you're going to drop the 30%, because you don't know how it's going to work in April, May and June. It's not that easy to do the prediction. I'm an accountant and I also think that it's quite hard to tell how the turnover is going to be for the next 3 months, especially during this crisis. So I would say use this result. If you're trying to claim for the 6 months, use the quarterly wages. If you haven't, a quarterly method to do the JobKeeper comparison, only if you don't meet March and April. Okay, so there was a question that was asked about the monthly turnover. So to work out your monthly turnover and compare it to last year, what you should do if you don't have an accounting software is look at your bank statements and check out how much income you've earned during the months that you want to compare. And those months that you more than likely want to compare is March and April. So how you compare it is you compare March 2019 versus March 2020. Or if that doesn't work and the 30% drop isn't during March, then you will compare April 2019 versus April 2020. So that's to answer one of the questions about the monthly ones. So there's a few more changes that happened. So people were freaking out because I was freaking out actually, that I wanted to make sure that I can get all the lodgements done by 26, and then they changed it to the 30th. Now they've extended to the 31st of 2020. So that's great news. So now you don't have to actually register by the 30th of April. However, if you're topping up wages, if you're paying wages to employees, and you need to make sure that you meet that $1,500 payment, you need to pay the employee or top up the employee by the 8th of May in order for you to get the first 2 April fortnights reimbursed to you. So if you, for example, you operate a hairdressing business and you pay employees $500 a fortnight because they only work 2 days a week, You have to make sure that you top them up to 1,500 by the 8th of May in order to get the JobKeeper payment to reimburse. If you haven't done that and you don't top it up by the 8th of May, you'll miss out on the JobKeeper reimbursement. And even if you top it up after May, you won't get the reimbursement. So just be careful of that. The due date now has changed for payment dates to 8th of May, which is okay for my clients because most of them have topped it up already. And if you don't have to top up, if you're a sole trader, for example, or you're a business that doesn't have any wages and you just want to nominate yourself, the due date's the 31st of May 2020. And the last change that happened over the weekend was they initially included anyone that was over 16. Now they basically said 16, 17 who are full-time students and financially dependent on their family are not eligible for the JobKeeper payment, which is kind of ridiculous. So you're looking at like mainly the apprentices and the young kids that have worked more than 12 months as a casual job or in a part-time or full-time job, but they're 16 and 17. If you're in a full-time job, more than likely you're not a full-time student, so you're fine. But it's mainly for the part-time and casuals that have worked more than 12 months. Some of those have been excluded. So have a look at your business. If you've employed your son or your daughter in your business and you thought you're gonna get 1,500, think again. The tax office is on you and they're basically taking that off. So, alternative test. So, this is the one where probably everyone's here for. Alternative test is basically where there are different scenarios. Initially, the turnover test was basically what you do is you need to work out a 30% drop in your business for the tested month. So the test month could have been anywhere between March all the way to September. But the earlier the better because you get more JobKeeper payments. So assuming that the JobKeeper test was initially a turnover test and you wanted to apply it to my business, for example, I will be choosing April 2020. So the test month is April 2020, or you can choose quarter, but in this case we're choosing month. And April 2020, and the comparative month has to be 12 months before, which is April 2019. So that's how the formula used to work when you did the 30% drop in turnover test. Now the alternative test has came in, and what the alternative test has essentially done is basically changed which month you compare it to. So this month stays the same. You can decide on which month that you want to compare. So you got March, April, May, June, July, all the way to September. But what has changed is basically, instead of choosing that 12th month before the test month, you can now choose a comparative month depending on that test you choose for the scenario. So alternative test has basically allowed you to change this comparative month and choose a month that's more suitable to your scenario. So if you're a startup business and you're under 12 months, you wouldn't have April to compare to. You would have like July, August, all the way to March to compare to. So the test in the ones that I'm gonna explain allow you to change the month or comparative month and compare it to the test month, which is your April 2020. Still note though, you still have to show a 30% drop in turnover. Okay, so the turnover test still applies, but the only thing that changes in the alternative method is that the comparative month changes. One thing I also want to, they also mentioned is that now they're excluding any bushfire or drought lodgement concessions that have been affected your business. So if you haven't been affected by bushfires and droughts in your business, then you don't have to worry about this. It's just that some business owners have got zero income during that time because they were affected by bushfires. So therefore it would miscure the turnover test. So they're basically saying that if that happened to you and you got a concession, you can exclude your those months out. Also, I just want to make it clear to you guys, the alternative test just came out on Thursday and Friday last week. So it's actually a legislation, meaning that it's all in lawyer terms and it actually makes no sense for a normal person to read it. They also haven't actually provided examples. So it's released on the ATO website, but when you read the ATO website, it's only one page with like probably around 10 lines. And it just basically states the different scenarios, but doesn't go into detail. So right now, if you don't understand it, even after me telling you what it is, then more than likely no one else understands it for now. So we're still waiting for more information. Right now, what I'm giving you is an interpretation of the law, which the ATO has not provided examples of yet. So these are the different scenarios for the alternative test. So the most common ones are the new business. If you started within 12 months, you have restructured your business, your high growth business, and they're the main ones. Those three there are the main ones. But then there's the other ones, which is like you've purchased a new business or you sold your business, so therefore your turnover has changed. And in a business restructure, once you restructure your business, so for example, if you move from a sole trader, when you move to a sole trader to a company, that basically means that your turnover would have changed and you would have lost some of your turnover when you were a sole trader. If you're a high growth business, so this is the part where a lot of startup businesses that have been more than 12 months, but they like pre-revenue and started generating income like starting from July, but the income increases dramatically over months. So the tax office realized that yes, we got to include these people into the turnover, because yes, they may have increased income from December to January to February, but from April onwards or March onwards, the turnover has dropped drastically, more than 30%. So this test in this scenario includes those people. So, but like I said, the most common ones are high growth and new business startup. So there's also other tests. I'm not going to go into detail of these ones. They're quite similar to these tests, but they're not as often. So irregular turnover is not that common. Sole trader with sickness or injury or leave, it's just basically, if you're a sole trader, you went on maternity leave and you had a kid, they also want you to be included, because your turnover from, like, you know, for example, March last year all the way to April or June was 0. So if you start making money now, but it's lower, like you made 5K as opposed to last year, you're making 0, you're excluded out of the turnover test. But this test here, this alternative test, includes you. So you have to have a think about this if you're on maternity leave. So let's jump into the scenarios. So this is probably a common question, which is basically the new business or startup. So if you started within 12 months, this is the test you apply. Looks very complicated, but it's actually really easy to understand. So first, there's actually 3 tests. Each test depends on when you start your business. So if you started your business before the 1st of February, then you can apply 1. You also can apply 2 if you started before 1st of December. And the last one is only if you started after the 1st of February 2020. Okay, so this one here, you compare an average of the months from when you started. So assume that you started your business in August, and you want to compare the month that you made the lowest, like what you predicted to make the lowest drop. And most businesses will choose April, because April is probably the month that the coronavirus has affected most businesses. So test month is April. How you do this calculation is basically average monthly turnover from start compared to your test month, which is April. So you do the average of August all the way to March. I'm not going to tell you how many months that is, because I'm very bad with my maths, but you add up all the turnover divided by how many months there are versus April. So you've worked out basically the average. If your turnover is again drop more than 30%, then you meet the alternative test, then you can apply for the registration of JobKeeper on April month. Cool. Does that make sense? So that's the first test. All right, and that only can be applied if you've started your business before 1st of February. And then the second test is if you started your business before this 1st of December. So in this case here, this client started the business in August, so we're gonna try the same approach. This one's a bit more special, because just because you started your business in August, August might have been a very slow month. You may have made no money whatsoever. So in this test here, this test is more suitable for startups that haven't made money in the startup phase, but later on down the track have. So this test basically applies where if you started your business in August and you still choose April to be a test month, you can take the average of the first 3 months prior to the test month. So if you choose April, you can choose January, February, March, average that out, add that up and average that out, and then compare that to April as well. But another thing I want to mention is that there's multiple scenarios, and sometimes you might meet 2 scenarios out of the 7 or 8 scenarios they provided. So you only just need to meet 1. So you can choose and mix and match. The whole design of this JobKeeper payment is to include people that have made a 30% drop. So they're trying to actually include you. So don't feel like as if, oh, I don't know if I'm actually meeting this one. don't know if I'm meeting this one. If you actually can see that you've actually made a 30% drop, then and you're pretty much applying one of these tests, the tax office is actually trying to include you. That's the whole point of this alternative test. So if you believe that you made a 30% drop compared to previous months, then I don't see why you shouldn't be able to apply one of these tests. Okay, so jumping back onto this one, this was an average, and this last one is quite simple. You started in the 1st of Feb, so you literally just started like a month ago. So we can't do a comparison of like the last 3 months, or we can't add up the average of the last 3 months. So what they do is instead work out how many days there are that you've traded. So assume this business started in the 10th of February. There's 19 days until the end of the month. So as a result, you do turnover divided by 19, then you work out the average turnover per day, and then you times that by 29, and you've basically turned it into a monthly turnover. You monthlyized it instead of annualizing it. You monthlyized it. So as a result, you can compare it to the March, or you can compare it to the April. So that's how that works with the new business startups. So this should answer some of your questions if you started your business within 12 months. Okay, so there's the next one here. So this is a really simple one. Assume that you purchased a business. That means that if you purchase your business, your turnover will be significant after you've taken over that business. So I've had clients that acquired another gym. So initially they were making 600K per year. Now they're making $1 million because they've taken over another gym. As a result, this scenario can apply to you as well, because what they do is they say that if you acquired a business and your turnover has significantly increased, you can't apply the turnover test. So as a result, we'll give you the alternative test, which is the business purchase test, which is as long as your turnover month after the purchase of your business. So for example, if you purchase a business in December, we want you to compare your January versus your test month. And again, I'm choosing April because most people will choose April. So if your January, which is the month after your purchase, is higher than your April by 70%, that means that there was a 30% drop in April. So as a result, you can also apply and get the JobKeeper payment because you meet this test here. So that's the business purchase, okay? Then there's the business restructure. So the business restructure basically is they realize that some businesses have restructured their business. So they started from a sole trader business, say last year, and then in August, they merged and created a company, for example. So they also want to apply this test as well, and your turnover would have changed as well. So what they basically said is don't apply last year's month. Again, choose the month after your restructure, very similar to the business purchase test, versus your April month, which is your test month. So same case, very similar case as the business purchase. Same case as the business restructure. So choose the month after the restructure. Okay, cool. And this is the high growth business. Okay, I'm just gonna let you guys know this high growth business test is very confusing, and I don't know the full answer to this. So this is the way I'm interpreting it. So I'll explain it and just let you guys know that we still need some more clarification, and we need some examples from the tax office because we're not 100% on this test. It makes sense, but I just don't know how to apply it, that's all. So this test is done in 2 ways, like 2 parts. So first you need to make sure you can use the test, and this is the 1, 2, and 3. Once you know that you meet one of these requirements, then you can choose the method of how you can apply it. So the method of applying this test, as long as you meet one of these requirements, and I'll go into detail of these requirements, once you know you meet it, then that means that you can apply the test. And the test method is basically, you take the average of the 3 months prior to the test month. So assuming that you had a high growth business and you've been running your business for 2 years, and for some weird reason, you only started making money in January 2020. But then your turnover dropped completely in April. So you're making like 20% or 0. And as a result, you only can really compare, you can't compare to last year, you have to compare to the last 3 months. So this test allows you to apply that. So you can choose the average of the 3 months prior to April, so January, February, March, and then take the average versus your April month versus your test month, which is April. But in order for you to apply this test, you need to meet one of these rules. And the rules are basically your business has showed a 50% increase of turnover in the last 12 months before the test period, or your business has showed a 25% of increase in turnover in the last 6 months before the test period. So if you take this example when I chose April, then we're looking at like the last 12 months from March onwards. And this one is the last 6 months of March 2020. And this one here is the last 3 months of March. So it's a bit confusing. And the one reason why I think it's confusing is I can't tell and I can't guarantee what the answer is on if it's comparing, you know, March 2019 to 20 to March 2018 or 19. So in this case here, let's take this example for here. So we had to show a 50% increase in turnover in the last 12 months. But I don't know if it's actually March 2018-19 versus March 2019-20, or is it just March 2019 versus that month itself compared to March 2020? And the tax office hasn't actually been clear on that. So that's the part where I'm a bit worried about this one. But if you meet both of them, I don't think you have to be worried. So if you believe that the 12 months, March 2019 to 2020 versus your March 2018 to 19 is a 50% increase, and on top of that, your March 2019 versus your March 2020 is also a 50% increase, then really, technically, you've made a 50% increase, whether it's the other way or the 12-month way. So they haven't been clear on it, but if you do meet that, then you can apply this test, and this test is the 3 months prior. Does that make sense, guys? Trying to explain it the best way I can, but there are 2 parts in this test. You have to meet one of these rules. Once you meet one of these rules, then you can apply that 3 months prior average versus your test period. Cool. Hopefully that makes any sense. And sorry, monthly isn't a real English term. Yes, I know that, but I just want to say that. And the other methods. Okay, so there's other methods, like I mentioned, that aren't really that common, which is irregular turnover and sole trader. So if you have irregular turnover, you can apply that test. And the test is very similar. They just changed the comparative month. Like I mentioned before, your test month is the month that you choose, but it changes your comparative month. You just need to see if your business is making irregular turnover. If it does, then you can apply that test. If your business is a sole trader or partnership and you were sick, injured, or on leave, then you can also try and apply that test as well. All right, guys, I am up with time, but again, we're also doing the JobKeeper payments for everyone as well. So, and there's also a lot of information that we've done on our website. So if you're unsure of anything, check our website first. If you need a tutorial, check our YouTube. And if you need more help, then contact us and we'll try to help you out as much as we can. Good luck, guys. Hope the whole COVID-19 thing is better for everyone and for me as well, because I'm dying and stressed out. Cool. Thanks, guys.